Investors pile the pressure on Spain to ask for help, so setting off a wave of bond buying by the ECB to rescue one of the Eurozone's weakest economies. Madrid's short-term borrowing costs fall at a reasonably well-received bond auction earlier today, but the yield on Spain's 10-year debt is hovering around the 6% mark. The government says it's still considering the terms of a European bailout, a condition for ECB help. The pressure likely to grow in the coming days. Welcome to our look at the trading day ahead. We should get more clues to the Bank of England's thinking in minutes out Wednesday. A Reuters poll predicts the bank will wait until November to boost its QE program, despite expectations that the economy will bounce back from recession in the last quarter of the year. The bank is set to pump in another £50 billion. Our poll also predicts a further £50 billion to come after November, making a final total of £425 billion. But Saxo Bank's Nick Beecroft says the improving economy actually makes more easing less likely.
I do have to say I should maybe cast off the cloak of doom somewhat. Recent UK economic releases have delivered some positive surprises for the first time in a long time. Right now, if you ask me, I'd say we will see further quantitative easing before the end of the year, but it's becoming more of a close call.
The Bank of Japan, meanwhile, wraps up its two-day policy meeting. More easing is becoming likely in the face of the strong yen, but most observers reckon the BOJ will wait until next month to act. Markets are still on intervention watch. At the same time, analysts say the Japanese authorities need to follow the Fed's lead on stimulus if they want to bring down the yen. Oil prices steady in the wake of Monday's mystery $5 slide. The decline is being variously put down to finger trouble, computer trading, and rumours of an imminent release of US strategic crude stocks. But Simon Wardell of IHS Global Insight says there's no fundamental reason to suggest falling oil prices.
The economic outlook doesn't look great. There are concerns growing over what's going to happen with the Chinese economy. But at the same token, yes, there's concern over potential supply disruptions as a result of these geopolitical issues. And of course, Syria as well, rumbling in the background, wider risks in the region, as well as the Iran situation. So it's really a balance of those supply concerns and also worries over how quick the economy is going to grow.
Also Wednesday, the German government is selling €5 billion in two-year federal notes. German yields have risen from the record lows we saw earlier in the year, reflecting the improvement in sentiment in the Eurozone. Lisbon is also due to auction up to €1.75 billion in short-term paper. Turning to stocks, retailers will be in focus. Spanish group Inditex, the owner of the Zara chain and the world's biggest fashion retailer, expected to post a 26% jump in first-half earnings to €905 million. Sales are being driven by Inditex's advance into new emerging markets. French Connection will also report interim numbers. That's it for now. There's more on Reuters.com and the Insider platform. And do join us throughout the week for Reuters Today, a snapshot of the latest world news and market headlines, 8 a.m. London time each weekday. I'm Axel Threlfall. This is Reuters.